Friends, hope my voice is audible. Ashok ji, please confirm if my voice is audible. Can you please confirm on the chat box? Okay. So good morning, students, and warm welcome you on the revision and query session on Ind AS 116. Students, in the last batch, this standard was covered in 5 classes, and we will be taking 2 classes on this particular standard, and we will discuss each one of the concepts with the help of one of the practical question, right? And we will revise or we will brush up all the concepts of Ind AS 116. I will advise and recommend all of you, please go through with the last lecture which was there on Ind AS 116, because those lectures were detailed lectures covered in 5 classes, right? So concept wise, revision wise, query wise, these 2 classes will be more than sufficient to cover Ind AS 116. Now, friends, this Ind AS 116 leases standard, right? So, what this standard talks about, and what is the applicable standard globally and in India? In India, we are aware that Accounting Standard 19, AS 19, is applicable in accounting standard. And this standard we have read in CA Intermediate also, and we have used this standard for the accounting of leases in the books of lessees or in the books of lessor, right? While auditing or while accounting, correct? Friends, globally, there was International Accounting Standard 17. There was, I have used the word was, right? And this IAS 17 was effective till 31st December 2018. Means this standard is no more. This standard has already gone 6 years back. As of now, globally, IFRS 16 is effective as on date. If someone will ask you which international standard, which IFRS standard is applicable in Middle East, in UAE, right, in Europe, so IFRS 16 is applicable. Okay. In India, friends, when there was IAS 17, we had Ind AS 17, which was effective till 31st March 2019. So as of now, we have Ind AS 116, which is effective as on date. To summarize, in India, in terms of old accounting standard, AS 19 is applicable. Globally, IFRS 16 is applicable. In India, in Ind AS, in CA final, Ind AS 116 is applicable, right? If I talk about Ind AS 116, first of all, I'll give you the context why Ind AS 116 was brought in. What Ind AS 116 differentiate, right? Why being a global standard, they were not happy with IAS 17, or why India was not happy with Ind AS 17. Okay. So we'll discuss this with the help of an example. And now I'm moving to my Excel file. Hope my Excel file is visible to all. I hope this file is visible to all. Yes. The first example is Shruti has purchased a car from her own funds for rupees 10 lakhs. Friends, I have not changed the example which I have taken in the last class, in the last batch, so that when you listen those videos, you will be able to relate the examples of Excel file as well. Okay. Shruti has purchased a car from her own fund for rupees 10 lakhs. Now, what is the accounting treatment of this? The car will be debited and the cash will be credited. Correct? PP will be debited and the cash will be credited. In the balance sheet side, asset side, one asset will come and one asset will go, right? So recognize the asset and reduce the own funds. Correct? What is the accounting treatment? What is the accounting treatment? C has to recognize the asset and reduce the own funds. Second example, Anisha has purchased a car by taking a car loan for rupees 10 lakhs. Now, what is the accounting treatment here? Again, C has to recognize the asset and recognize the liability, which is the loan, has to recognize the asset and recognize the liability. So it doesn't matter whether she has purchased the car from her own funds or she has purchased the car by taking a liability, taking a loan, right? She is recognizing the asset on the asset side of the balance sheet, right? In one case, her own funds is reducing. In the second case, her liability is coming in the balance sheet. Third example, Geeta has taken a car on lease basis for 3 years. As per accounting standard 19, our old accounting standard, or Ind AS 17, which has already been deleted. What is the accounting treatment? If somebody has taken a car on a lease basis, what is the accounting treatment? Can anyone tell me? What is the accounting treatment? You are right, Rahul. So in accounting standard 19 or old Ind AS 17, lease rental has to be debited in the P&L. I am talking about our accounting standard, and I am talking about old Ind AS 17. Old Ind AS 17. You're right. So recognize the lease rental expenses. The car will not come in the balance sheet. The car will not come in the balance sheet. Now, what happened? If I am summarizing all these three examples, tell me, Shruti, Tanisha, and Geeta, are they able to use the car? Doesn't matter they have taken on a lease basis, doesn't matter they have created a liability or they have reduced their own funds. Will they be able to use the car for their own purposes? Answer is yes. Answer is yes. Correct. The way the car was used when the car was taken from own funds, or the car was taken for a loan from a loan, or the car was taken on lease basis, whether the usage will change. The car will the car will be used as a car. Am I right? The car will be used as a car. So the usage will not change. Usage will not change. So friends, the moment Geeta has taken a car on a lease basis for 3 years, whether Geeta will have a full control on the car for the 3 years? Answer is yes. For example, I'm living in a rental house, right? And when I'm living in a rental house, I'm paying a lease rent to my landlord. Okay. When landlord has to come to my house, he has to take my permission. He used to call me and he used to ask me, Mr. Garg, will you be available? Should I come at this time? Right. It's not like that he is the owner of this house. He can come at his whims and fancies. He can come whenever he want to come. Why? Although he is the owner of the car, but he has transferred the right to use of that asset for a particular period of time. Right to use of that asset for a particular period of time. It means, had I been purchased this house, or had I been taken this house on a lease basis, from the usage perspective, from the right to use the asset perspective, I have the same rights. I have the same rights. I'm talking about right to use. Are you all agree with me or you don't agree with me? Abrikesh, will you agree with me? Yeah. So friends, this was a big thought in the mind of a world accounting standard setters. This was a big thought. If someone is taking an asset on a loan basis, he is creating a liability and he is recognizing an asset. But if someone is taking an asset on a lease liability, on a lease basis, he is not recognizing the asset and he is not recognizing the liability. And friends, in US, lease is a prominent source of financing. Not even in US, even in India also. Lease is another form of financing. If you can't buy the house, you can take the house on a lease basis. Instead of paying an EMI, you are paying a lease rental per month. Correct? So there was a thought, if somebody is getting an asset on a lease basis, he is getting a right to use of that asset, then why that asset should not be capitalized, and why The lease liability for a non-cancelable period, the lease liability for a non-cancelable period should be taken into consideration, because doesn't matter whether you will use or you will not use the asset, you have to pay that liability. And friends, with this thought, there was a birth of Ind AS 116. And Ind AS 116, what change Ind AS 116 brought in? Ind AS 116 has given a single lease model. What is meant by single lease model? So far, being a CA final students, you all are aware about operating lease and finance lease, right? Since our childhood, we have learned two concepts. If somebody will wake us, somebody will wake us and somebody will ask what is the kind of a leases, we will answer operating lease and finance lease. Friends, Ind AS 116 has given a concept of a single lease model, and Ind AS 116 says that there is no concept of operating lease and finance lease from the lessee perspective. From the lessee perspective, okay? From the lessee perspective. And it says that you have to measure, you have to recognize all the leases in the books of the lessee using a single lease model. And what is that single lease model? This single lease model is like a finance lease, where the lessee was recognizing the asset and lessee was recognizing the liability, correct? Okay, the lessee was recognizing an asset and the lessee was recognizing a liability. Now I'm stopping my discussion on Ind AS 116 and I'm taking you back on AS 19 and Ind AS 17 again. In case of Geeta, who has taken a car on a lease basis, in accounting standard 19, accounting is lease rental expense account debit to bank account, assuming 1 lakh rupees the lease rental for every year, correct? Ind AS 17, the older version of Ind AS on leases, which is deleted and not applicable as of now. That Ind AS also has given the same accounting, lease rental expense account debit to bank account, correct? As I told you, Ind AS 116 has given single lease model. What Ind AS 116 said? Ind AS 116 said that for a period of use, what is the period of use here? 3 years, right? We have seen that Geeta has taken a car on a lease basis. The period of use is 3 years. The right to use which is given to Geeta is 3 years, where the landlord cannot interfere in terms of the usage of the car. Ind AS 116 says that, like you were doing in your finance lease accounting in AS 19, what you were doing, you were calculating the present value of the lease payments, correct? Here also, you will calculate the present value of lease payment. In this case, assuming the discount rate is 10%, my lease payments are 1 lakh rupees every year. My total lease payment is 3 lakh rupees. If discount rate is 10%, and friend, it is important to see whether lease rental are getting paid at the beginning of the year or at the end of the year. If it is at the beginning of the year, then your present value factor in the first year will always be 1. Are you agree with me? And in examination, these kind of things are tested. And whenever it will come, like the lease payments are paid at the beginning of the year, most of the students commit error. They commit mistake, right? So it is important to see whether lease rental paid is beginning or at the end of the year. I am assuming the lease rentals are paid at the end of the year in this question. Okay. If nothing is given and you want to say that lease rentals are paying at the end of the year, please give this assumption. Okay. If nothing is given, 1.1, 0.909. Okay. What is the second year present value factor? Divide by 1.1. What is the third year present value factor? Divide by 1.1. Just multiply by this. Your present value of lease payments over a period of 3 years is 248,685. Standard Ind AS 116 says that you have to make an accounting entry, right of use asset account debit to lease liability. Right of use asset account debit to lease liability. Sir, Like in our old AS19, if this asset was taken on a lease basis for 10 years and the useful life of the car is also 10 years, sir, it is like a finance lease in our AS19. So if the period is 10 year here, what is the accounting? Then you have to compute the present value over a period of 10 years. As simple as that. But the accounting will be right of use asset account debit to lease liability. And if you see here, the company, I mean to say Geeta in this question, Geeta has not capitalized the car. Geeta has capitalized right of use asset to the extent of 3 year period. The value of the car could be more than 10 lakh rupees. Correct? Correct? So C has only capitalized right of use asset to lease liability. Sir, we understood that at the commencement date, this accounting entry has been parked. Now, how this right of use asset will be finished or will be wiped out in the balance sheet and how this lease liability will get over. So, friend, this right of use asset has to be depreciated over the period of lease term. What is the accounting entry? Depreciation account debit to accumulated depreciation. Divide by 3. Debt to accumulated debt. Second year, same entry. It has to be straight line method. Third year, same entry. And you can see at the end of 3 years, the total balance in accumulated depreciation will stood at 248,685. And this is how your right of use asset will be finished. Okay. Is that clear? Is that clear? Now, we understood that right of use asset will be finished. But what about lease liability? Now, what you will do? Your opening liability you have created on the commencement date is 248,685. And every year you will pay lease rent also. Every year. So this 248,685, although you have to pay 3 lakh, but you have shown a liability of 248,685. It means the way you have discounted, you will have to undiscount as well. What is your interest rate? Interest rate is 10%. You have to create an interest cost. This multiply by 10%. Okay. And you have to make a lease payment. Correct. What is your closing liability? Opening liability plus interest cost plus closing liability plus lease payment. Next year it will become your opening. You have to create an interest cost. You have to make a payment. You will get a closing liability. This will become your opening liability at the beginning of the third year. You have to create an interest cost in the P&L. You have to make a lease payment at the end of the third year. And this is how your liability will also get zero. And every year you have to debit in the P&L. How much? In the name of the interest cost, this to lease liability. Second year, 17,000 to lease liability. Third year, 9,000 to lease liability. If you can see, the total amount debited in P&L, how much? In the name of depreciation, 248,685. In the name of interest, 51314. And the total amount is 3 lakh. Sorry. Total amount is 3 lakh. And even though if we would have applied AS19, the answer in P&L will come at 3 lakh rupees only. Correct? So this is how this entire lease accounting has to happen in Ind AS 116. A case is asking if more than one asset on lease, only one account head has to be debited. So in the balance sheet, it will always be right to use asset. Correct? Like if you are purchasing 10 car, 20 buildings, you are debiting PP, but you are maintaining a fixed asset register. So the companies which have a multiple leases, like aviation companies, they have a fleet of leases. They have a fleet of, aircraft on leases in their books of accounts. Like in case of retail industry, Big Bazaar, Reliance Fresh, they have lot of premises on a lease basis. So like you are maintaining fixed asset register, you have to maintain right of use asset register. Okay. Right of use asset 1, let's say Ludhiana building. Right of use asset 2, Punjab building. right of use asset 3, Delhi building, right? But in the balance sheet, the account head will always be right of use asset, correct? In the backup, in the right of use asset register, the number of leases will be segregated, okay? So that you will be able to know the outstanding balance of right of use asset, outstanding balance of lease liabilities and everything, correct? Is that clear? So friends, now I'm taking you back on my PowerPoint presentation. We have enough background on Ind AS 116, considering it is a query and revision session. Now, friends, I want to tell you about the universe of Ind AS 116. What we are going to revise, what we are going to discuss today and tomorrow. Friends, what is the objective of this standard? Very simple. The objective of this standard is to account for the leases in the books of lessee and in the books of the lessor. Correct? So this standard talks about lease accounting. As simple as that. As simple as that. Now, what is the scope of the Ind AS 116? We'll discuss the scope. Some recognition exemption is also given in this standard. Recognition exemption means the way Ind AS 116 talks about recognizing right of use asset and recognizing lease liability. This standard has given some exemption. And I can tell you right now, considering it's a revision session, this standard talks about short-term leases exemption and this standard talks about low-value leases exemption. We'll discuss this in detail. What is my short-term lease exemption and what is my low-value exemption? This standard also talks about the heart of this standard. What is a lease? What is a lease? Okay. So friends, this standard talks about what is a lease, whether an arrangements contains a lease, separation of a lease and non-lease components, right? First of all, this standard talks about if there is a lease contract, is it a lease contract to be captured under Ind AS 116? So we have to see the lease definition. Okay. Then separation of lease and non-lease components. Like you are living in a rental accommodation in a society. What you are paying, Viraj, Abrikesh, Rahul, what you are going to pay on a monthly basis? Lease rental means rent and maintenance charges, electricity bill, water bill, maintenance charges. So there is a lease component as well as there is a non-lease component, right? There is a lease component as well as there is a non-lease component. So this standard talks about how to separate lease and non-lease component. When a contract can be combined, this standard talks about that also. Some key concepts like this standard talks about inception and commencement of lease. This is a very important concept from examination perspective as well as from the real life perspective also. And students, during my query session, I'll give you some key pointer where the students are committing a mistake. Like one of the key pointer I have told you, it is very important in Ind AS 116 to see whether the lease payments are getting paid at the beginning of the period or at the end of the period, right? This will change your discount factor for the first year, even in the second year also. So this will change your present value factor. Number two, the inception of the lease and commencement of the lease is again important, right? So inception of a lease is a time or is a situation where the lessor and lessee agrees to the terms and condition of the lease. Agrees to the terms and condition of the lease. And I used to take one example. Let's say Viraj came to me. Viraj belongs to, for example, Punjab, and he came to Delhi in the month of February. And he approaches me, sir, I want to have one lease accommodation, rental accommodation. I told Viraj, I can give you this lease accommodation and I will charge 20,000 rupees per month as a lease rental, as a rental per month. Right? And I can give you two-bedroom house, two-bedroom flat, which is situated on the third floor of my building. Viraj says, okay, sir. So can I come with my bag and baggage in the next week? I told him that Viraj, the flat is under renovation and I will be able to give you this house from the 1st April. And Viraj has agreed on the terms and conditions, and he has also given a security deposit of rupees for a period of 1 month of rupees 20,000. So in the month of February, let's say 15th of February, is inception date where myself as a lessor and Viraj as a lessee have agreed to the terms and condition of the lease. From the 1st April, where I will give the handover or possession of the premises to Viraj, in that case, it will be considered, the 1st April will be considered as a commencement of the lease. My dear friends, the commencement of the lease always starts where the lessee is getting the asset for a use basis. It is very important to understand. So the accounting will start not from the inception date. The accounting will start from the commencement date. One more situation where the students make a mistake. Let's say Viraj told me, sir, I don't have enough money. So, sir, from 1st of September, I can pay you whatever lease rental you want to, uh, so you want from my side. But sir, for the first 3 months, I'll not be able to pay you anything. And Viraj is my student. I'm trusting on him. I told him, Viraj, okay, no problem. You can start living here from 1st April. And from 1st September, I'll charge 22,000 rupees per month. And your first 3 months will be rent-free period. You are not required to pay me anything. Now, friends, the accounting will start from 1st April or 1st September. The accounting will start from 1st April. Doesn't matter. He is not going to pay me rent for the next 6 months. He is going to pay me rent from 1st September, but the commencement of the lease has been started. The premises has been handed over to him. Correct? So generally student made a mistake. Whenever they see the rent-free period in the beginning, they start the accounting from the date where the rent is getting paid. Please don't do those kind of a mistake. Correct? So 3 important pointers I have given you where there is a chance of making a mistake. Correct? Is that clear? Is that clear? So Abrikes has well summarized the inception and commencement of lease concept. He said inception is like a sanction and commencement is like a disbursement. Well summarized, Abrikes. Now, after understanding inception and commencement, we will discuss lease term, a very important aspect. If you are not aware about the lease term, how will you do the discounting? For what period you will consider the lease rent? For what period you will can compute the present value factor? So computation of lease term is very important. And here also, students used to commit a mistake. There could be a one paragraph question of, let's say, 10 marks or 12 marks. In that question, a lot of nitty gritty will be there. But if you understand the fundamentals very well and you read the question step by step, the question will be a simple vanilla ice cream for you. I can tell that. A simple vanilla ice cream for you. Just you have to flow with the flow. Okay. So lease term I'm going to discuss, and I'll do one case study also. Lease payments. If you are not aware about the lease payment, what you will discount, how you will compute right to use asset, how will you compute lease liability, correct? Discount rate. Generally, this discount rate will be given in the question. Okay. Initial direct cost. Whenever you are entering into a lease agreement, lease contract, you have to you have to enter into some cost also. For example, brokerage, fees, commission, stamp duty, court fees charges, lawyer charges. So those initial direct costs, what is the accounting treatment of those costs? Okay. So standard also talks about that. Then the concept of economic life and the concept of fair value is also given in Ind AS 116. Friends, after understanding the key concept, we will discuss the lessee accounting and lessor accounting. In the lessee accounting, we will discuss initial recognition and measurement of right of use asset and lease liability. Then we will discuss subsequent measurement on the reporting date, depreciation of right of use asset and interest cost on lease liability and repayment of lease liability. We will discuss that. We will also discuss the remeasurement. Remeasurement. When we need to discuss the remeasurement, whenever there is a change in the lease terms and conditions. Okay. And friends, whenever there is a change in the scope of the lease, there could be a situation of lease modification also. Correct? So whenever the question wants to test you on a complex ground, the question will be there either on the remeasurement aspect or on the lease modification aspect, right? So these two concepts are very important from the examination perspective, correct? These are the very important. If the question is lengthy, correct, and if the question is complex, it has to be captured from these two aspects, because the lease measurement and the lease modification will also cover the basic concepts of leases. Presentation and disclosure is given in the standard. Lessor accounting. In the lessor accounting, the lease classification is given. The lessor accounting is typically same what we have read in AS 19, or if we got a chance to read in AS 17, it is not mandatory, it has been deleted, right? So the lessor accounting is typically same in Ind AS 116 also. Whatever we know about the lessor accounting in AS 19, it is largely same. So there is a concept of finance lease, there is a concept of operating lease in case of a lessor accounting, right? We'll discuss. Modification bit we'll discuss, and presentation and disclosure we'll discuss. Friends, again, whenever the question wants to test you on a complexity aspect, the question will check you on subleases, and the question will check you on the sale and leaseback transaction also. So friends, from the complexity perspective, number one is remeasurement, number two is lease modification, number three is subleases, and number four is sale and leaseback. So these four are the critical and complex aspect in Ind AS 116. Okay. If you will practice these four critical aspect, and if you will practice all the questions from the study material and all the questions from revision test paper, right, probably you will be able to touch upon all the concepts of Ind AS 116. Okay. So these four, I hope you guys have already write down these concepts. Have you written down these concepts? Okay. Shall I move forward? Fine. In scope of Ind AS 116, this Ind AS 116 is applicable to all the leases, including lease of right of use asset in sublease, except there are few things which are given for which Ind AS 116 is not applicable, like leases to explore for use of mineral oil, natural gases, leases of biological assets, service concession arrangements, licenses of intellectual property, right held by a lessee under licensing agreement for such items such as motion picture film, video recording, plays, manuscript, patent, and copyright. This is just for your reading, correct? So these are some exclusions which are given. Otherwise, Ind AS 116 is applicable on all the lease contracts, provided it should meet the definition of a lease. Now, friends, we have come to the first concept of this standard, which is identification of a lease, whether the lease contract is covered under Ind AS 116 or not. Correct? So we have already reached to identification of a lease. Can you tell me quickly what are the four parameters to check whether it is a lease agreement or not? A father has given a flat to his son. A father has given a flat to his son for the use purposes 5 years. Tell me, is it a lease contract? Tell me, is it a lease contract? What is missing here? What is missing here? Why it is not a lease contract? There are the two parties, and the father has given this for a period of 5 years. There is a two parties, the asset is there, the period is there. What is missing here? Abrikes, you are right. The consideration is missing here. The consideration. Correct? So, friends, the four aspect in any lease contract is: first, there should be two parties. Number two, there should be a there should be a right to use of the asset. Means their asset should be there. Number three, there must be a definite period of time. Number four, there must be a consideration. Okay. So party, asset, period of time, and consideration. These four aspects are there. Sir, these four aspects were there in AS 19 also. What is new in Ind AS 116? Friends, AS 19 talks about a lease is a contract where the lessor conveys the right to use of an asset, the right to use of an asset to the lessee for a period of time in exchange for a consideration. So in AS 19, this was the wording which was used: right to use of an asset. What are the two different, what are the two new wordings which are there in Ind AS 116 in the lease definition? What are the two new words which have been added? You are absolutely right, Rahul. Number one is control, and number two is identified. Control and identified. This control word is new, and this identified word is new. Right? Sir, what is meant by control? What is meant by control? So, as per Ind AS 116, a lease is a contract where the lessor transfer the right to control the use of an identified asset for a period of time in exchange for a consideration. Right? So, friends, we will discuss these two concepts one by one: right to control the use of an asset and the concept of identified asset. Okay. And before that, let me make you guys understood the meaning of control. Let's say I have given my car to Abrikesh for using the car for a period of 2 years. Correct? And I'm giving so much of instructions to Abrikesh that Abrikesh, you cannot run this car more than 20 kilometers in a day. You cannot run this car, use this vehicle after 8 p.m. You cannot take this vehicle out of Delhi. You cannot carry more than 4 people in this car. You will always get the fuel from a particular petrol pump. You will always get the service done from a particular service center. Right? At the end of every week on Sunday, you have to take my car to me to just, take the inspection of this car. So I have given too much instructions to uppercase how to use this asset. Now, two questions are there. Number one, whether the uppercase has a right to use that asset. Number two, whether uppercase has a right to control the use of that asset. Who has a right to control the use of the asset? Question number one, whether uppercase has a right to use that asset. Question number two, whether uppercase has a right to control the use of an asset. So yes, uppercase has a right to use of the asset. No, uppercase does not control the right to use the asset. Uppercase is using the asset, but he is not controlling the use of that asset. Who is controlling? Alok Garg is controlling the use of that asset. Okay. So this is the difference between right to use and right to control the use. I hope with this lemon example, you guys have understood the difference between the use and control the use. Correct? Then identified asset. The asset must be identified asset. Means these two conditions should be satisfied to get a lease contract covered under Ind AS 116. Correct? Number one, there should be an identified asset. Number two, there must be a right to control the use of an asset. Okay. Now we will discuss these two concepts one by one. Then we will discuss lease payment. Consideration means lease payment. And we will discuss the lease period as well. We will discuss the lease period and lease payments. Okay. Lease period. Period of time means lease period. And we will also discuss the lease payments. Correct? So we will discuss these four concepts. Concept number one, identified asset. Concept number two, right to control the use. Concept number three, period of time. And concept number four, consideration, one by one. Okay. These four concepts are the heart of this Ind AS 116. What is meant by identified? Number one, if the asset is implicitly or explicitly, if the asset is implicitly or explicitly written in the contract, right? Then it has to be considered as a identified asset. But there is one exception. While the asset is explicitly or implicitly written in the contract, but if the lessor has a substantive substitution right, SSR, if the lessor has a substantive substitution right, SSR, if the lessor has a substantive substitution right, in that case, the asset will not be considered as a identified asset. What does it mean? It means for making an asset identified asset, number one, the asset should be explicitly or implicitly covered in the contract. Number two, the lessor does not have a substantive substitution right. What is meant by substantive substitution right? Substantive substitution right means the right to replace the asset, right to substitute the asset. If the lessor has a right to substitute the asset, in that case, it will not be considered as an identified asset. Sir, can you take some example here? Yes. A Limited is into the business of warehouse, correct? In the business of warehousing services. A Limited has a large area of warehouse. It has a large warehouse of 10,000 square feet. And this 10,000 square feet was segregated into 10 slots, right? There are 10 storage area. There are 10 storage area. Okay. Now, initially, A Limited entered into a contract with a B Limited. A Limited is a lessor, B Limited is a lessee. A Limited has given this slot number 1 to B Limited. And in the contract, it was written that A Limited has a right to substitute this location or this area from slot number 1 to any slot as per his desire. For example, if somebody will come, C Limited will come and C Limited will say that I need this slot number 1 because this is located at the gate. It will be convenient for me. I want this space. Correct? I want this space. And I want to give you a good premium. So in this case, A Limited will shift the baggage or this goods of B Limited from slot number 1 to any slot. When the contract was entered, slot number 1 was given with a condition that A Limited has a right to replace this asset. Correct? Now my question to all of you, whether this asset is explicitly or implicitly given in the contract. Question number 2, whether lessor has a right to replace this asset. Answer me these two questions. Yes, initially it was mentioned in the contract, but the lessor has a right to replace. So this asset will not be considered as a identified asset. Correct? In case of airport, you guys must have went to the airport. You guys have seen that there is a counter of aviation companies on the airport. Have you guys seen that? There is a counter of aviation companies on the airport. Yeah. You know, these aviation companies, these aircraft, these airline like Air India, Indigo, SpiceJet, Vistara, these companies have a counter on the airport where you are collecting your boarding pass, you are giving your luggage. All these airline companies are paying lease rental to the airport authorities. Okay. All these airline companies. And friends, these airline companies are not recognizing right of use asset and lease liability on these contracts. Why? Because they are not considering this asset, this area as an identified asset. Why? Because in all the contract, airport authority has a right to replace the counter, the area which they have given to the airline companies. For example, today you have seen that Air India is having a counter at gate number 4. Tomorrow probably you will find their counter at gate number 5, probably. Okay. So the airport authority has a right to replace the asset. The airport authority has a substantive substitution right. Substantive substitution right. And that is why the airline companies, which are the lessee, which are paying the lease rental, they are not doing the accounting as per Ind AS 116. Why? Because this asset is not considered as an identified asset. I hope it is clear to all of you. I hope it is clear to all of you. Yeah. So we understood the meaning of identified asset, and you can watch the detailed video on Ind AS 116, right, to understand this further. The second aspect, right to control the use of the asset. And right to use, we all are aware, this part control is very important. This part control is very important. Now, what is meant by control? Friends, two aspects you need to see. Two aspects. So Rahul is asking, sir, in exam, if there is a lessor has a right to replace the asset, then what is the accounting in that case? Rahul, if there is a lessor has a right to replace the asset, in that case, Ind AS 116 accounting will not happen. What is Ind AS 116 accounting? Recognizing right of use asset and recognizing lease liability, charging a depreciation and interest cost. Correct? If that accounting will not happen, then what accounting will you do? Since you are paying a lease rental, it is not an identified asset, I agree. But what is the accounting you will do? Tell me. Abrikesh, Viraj, what is the accounting which is going to happen? Yes, you are absolutely right, Rahul. The accounting will be lease rent accounting. Lease rent accounting. Lease rent account debit or rent account debit to cash or to bank account. Alternatively, rent account debit to landlord account, lessor account debit to bank account. Correct? So you're absolutely bang on, right? So if the question talks about one of the aspect, and this will come under your multiple choice question as well. In the question, these kind of facts will given, and in one of the question, it will give it the ask of the question will be that what is the accounting in the first year for such in such cases, correct? So you have to charge the rental into the P&L. You are not required to do any discounting or anything, correct? Yes, right to control the use of an asset. Friends, two things are important. Number one, when you will be able to say that, yes, I have the entire right. I am controlling the use. I am not only using, I am controlling the use also. Like in one of the example which I have taken of my car, which I have given to Abrikesh, right? I have make you guys shown the difference between right to use and right to control the use. So control comes from the two aspects. Number one, right to obtain substantially all of the economic benefit from using the identified asset. See, everywhere the asset word has not been used, the identified asset word has been used. Means the first test is it has to be identified asset. If it is not an identified asset, then then it is not an asset to be covered under Ind AS 116. Okay. So for identifying the control, the use of an asset, number one, the lessee should receive substantially all of the economic benefit which are arising from the use of the identified asset. Sir, what is that economic benefit which is arriving from the use of that identified asset? For example, I have given the factory, I have given my corrugated boxes factory, corrugated box plant to the lessee on a lease basis. Correct? I have the machineries, I have the infrastructure, I have the the factory building, everything I have, and I have given to the lessee on a lease rental basis of, let's say, 5 lakh rupees per month. That you should run my plant, okay, and I'll charge you 5 lakh rupees every month. Now, the government is giving a subsidy or the government is giving a grant whenever you are producing more than, let's say, 50,000 kg of corrugated boxes in every month. Correct? So the lessee has produced 60,000 kgs of corrugated boxes in a particular month. And in this case, the subsidy which is directly related to the production of the corrugated boxes, this subsidy will belongs to, this subsidy will belong to whom? This subsidy will belongs to the lessee, not the lessor. So substantially, if all of the economic benefit relating to the use of the asset belongs to the lessee, then it is it is ticking one of the box of controlling the use of an asset. And can you see the word is economic benefit from the use of the identified asset, from the use. Economic benefit from not the sale of the asset, because you are the lessee. How can you sell that asset? So it is only talking about use of the asset, right? It is only talking about from the use of the asset. Friends, so economic benefit means the primary output which you are producing, byproduct, whatever byproduct you are producing, or any other benefit like taxation benefit, like subsidy, etc., etc. If it is getting, if lessee is entitled to get those benefits, you can say that yes, lessee is entitled to substantially all of the economic benefit from the use of the asset. Okay. What is number two? Number two, right to direct the use of the asset belongs to the lessee. Number one, economic benefit. Who is receiving the economic benefit? The lessee is receiving the economic benefit. Number two, who is directing the use of the asset? Who is directing the use of the asset? The lessee is directing the use of the asset, not the lessor. It is not lessor who is directing the use of the asset. The lessee is directing the use of the asset. What is meant by directing the use of the asset? Right? So if the friends in Ind AS 116, you will find the word supplier. What is supplier? Supplier is like a lessor. You will find the word customer. Customer is a lessee. Okay. So a customer who is a lessee has a right to direct the use of identified asset if he has the right to direct how and for what purpose the asset is used. So lessor is not directing you how to use the car and for what purpose the car is used. Right? Lessor is not directing. Who is directing? Lessee is directing. Relevant decision about how and for what purpose the asset is used are predetermined. Are predetermined and the lessee has the right to operate in that manner throughout the period of use, and the lessee do not have right to change the operating instruction. At times, whenever you enter into the lease contract, the lessor gives you some terms and conditions. Correct? So it was decided in the beginning of the contract. And after that, the lessor cannot interfere into the use of that asset. He cannot change. Correct? He does not have a right to change the operating instructions. In that case, it will also be considered that the right to direct the use lies with the lessee, not the lessor. Okay? Is that clear? But lessor may have a protective right relating to the asset. For example, if you guys are living in a rental accommodation for CA preparation in Lakshmi Nagar or in somewhere different area in the New Delhi, I have usually heard that the lessor or landlord will say that beta, don't drink in our flat. Okay. Or, you are not allowed to have a party in the midnight. Okay. You have to be calm and peaceful. You are not allowed to take your friends for a night stay. Okay. So these are kind of instructions usually landlords are giving to the students or to the tenants. So if the lessor is giving some instruction which is protective in nature, there is a lease contract of a car and lessor is saying, I do not have an international permit and you cannot take this car to Bhutan, okay, or Sri Lanka or China. Lessor is saying you cannot carry any liquor or any kind of hazardous material in my car, or you cannot jump red lights, or you cannot drive my car more than 120 kilometer per hour speed. So these are kind of a protective right. These are not the substantive right? These are the protective right, because the lessor does not get any benefit, you know, from these rights. The lessor is only protecting his asset. Okay. So friends, for ensuring that there is a right to control the use of an asset, the lessee should have all the benefits relating to the use of the asset, and the lessee should have, you know, uh, direct or control the use of the asset. Okay. So these conditions are very important. Normally, these conditions may be given in the examination to check, are you good in the concepts? Are you fundamentally well aware of? Right? So the question may be asked in these lines. Okay. Yes. Just allow me a second. Any question so far? Friends, any question so far? Any question? Abrakes is asking insurance is on whose account? So Abrakes, generally if you are talking about the car, if you're talking about the property, insurance belongs to the owner. And in some lease contract, you know, there may be a mention that the tenant has to bear or lessee has to bear that insurance. It is depending on the lease contract. Insurance is not a lease payment. It's a non-lease component. Correct? And commencement date of lease I have already covered. So inception date, if on lessee who get claim. See, there are two aspects to it. Just try to understand logically. You are a lessee. You have taken a car on a lease basis. There is an insurance claim which is there. Okay. There is an insurance which is there on the car. God forbid, if there is an accident of the car and the car got damaged, if there is an insurance, right? So the lessor will get a claim of the insurance, correct? And of course, whatever amount as an insurance the lessor got a claim, the lessor will compensate the lessee. Of course, yes. But whatever over and above, which is not covered under insurance, the lessee has to bear because it is the mistake, which is not a I would say not a intentional mistake, but which is a mistake of the lessee and lessee has to bear. Number two, I have seen the contract where the lessor will say that so far there was no any claim on my account on my asset, and since now I have to take a claim, I will not receive the no claim bonus in the next year. You have to compensate me to that extent also. So the lessee has to bear that expense also, which has to be debited in the P&L of the lessee. Correct? So have you understood, Abrikesh, this aspect? Okay, fair. So inception date is a date where the party will decide the terms and condition of the lease, or the party will sign the agreement. And on this date, the parties, lessor and lessee, will identify whether it's a lease contract to be covered under Ind AS 116. And from the lessor perspective, the lessor will identify is it a finance lease or it is an operating lease. From the lessee perspective, it is a single lease model. There is no finance lease, no operating lease. From the commencement date of the lease perspective, commencement date is a date where the lessor makes an asset available for the use to the lessee, underlying asset. Okay. On this date, since the asset is available for use by the lessee, the parties will determine the lease term because this is the lease term on which the accounting will happen and initially recognize the lease. So on the commencement date, lease accounting has to happen, right? Lease term, very, very, very important aspect. What is a lease term? What is a lease term? So friends, the standard talks about the lease term. What is a lease term? And standard has given you four aspects. From the commencement date, from the commencement date, right? The non-cancelable of lease includes the period beginning from the commencement of lease and includes the rent-free period provided by the lessee, right? Together with a renewal, a optional renewal period and optional termination period. I'll try to explain this concept with the help of an Excel file, and let me take you on the Excel file. Now, what is the concept of lease term? The concept is non-cancelable period. Lease term is equal to non-cancelable period (NCP) plus rent-free period plus optional renewal period plus optional termination period. This is the definition of the lease term. Let's say the lessee entered into a lease contract or a lease term of 10 years with the lessee, correct? And the initial 4 year was a non-cancelable period. Initial 4 year. The initial 4 year are the non-cancelable period. Next 1 year is rent-free period. So for the first 4 year, doesn't matter the lessee will use the asset, the lessee will not use the asset. The lessee has to pay the lease rent. Or even though if lessee wants to breach the contract, the lessee wants to cancel the contract, terminate the contract, the lessee has to pay the lease rent for the 4 years. So 4 year is a lock-in period. After completion of 4 year, for the next 1 year, the lessor will not demand any lease rental for a period of 1 year. So after completion of 4 year, doesn't matter whether the lessee will remain in the premises or will walk out from the premises, doesn't matter, because the lessor will not get any rent, correct? And for the next 5 year, the lessee, if wants to terminate the lease, the lessee can terminate the lease. So the next 5 year is the optional termination period. Next 5 year is the optional termination period. Now the question has given you three facts that a lessee has entered into a lease contract for 10 years. The initial 4 year is the non-cancelable period. Lessee is not required to pay any lease rental for the 5th year. And the last 5 year are the optional termination period for which no penalty is there. Now the question is asking you that what is the lease term in accordance with Ind AS 116. So non-cancelable period 4 year, rent-free period 1 year. So whether 5 year is equal to lease term or lease term is equal to 10 year, what should be the lease term? What should be the lease term? Friends, standard says that while calculating a lease term, non-cancelable period plus rent-free period has to be taken into consideration. Plus, if there is an optional renewal period, that is also required to be taken into consideration if lessee is reasonably certain that he will avail the if he will avail the renewal option. Okay. So when a lessee is reasonably certain that he will avail the renewal option, for example, the contract is for 10 years and there is an additional renewal period of 10 years. And the lessor and lessee on the day one agreed that after completion of this 10-year period, if you will ready with the renewal, I will charge the lease rental at 25% less than the market rent. Okay. So this is one of the factor which indicates that yes, lessee will be reasonably certain to avail the renewal period. So that optional renewal period is also added into the lease term. Optional termination period, like in this case, 4 plus 1, 5, and the remaining 5 is optional termination period. The optional termination period is also taken into consideration while calculating the lease term. If lessee is not reasonably certain to terminate, or I would say the lessee is reasonably certain that he will not terminate the contract. For example, the lessee has done a lot of leasehold improvement. So lessee is not willing to vacate this property for next 10 years, right? Because he has done a lot of leasehold improvement. So in this case, there is a reasonable certainty that the lessee will not terminate the contract. So in this case, optional termination period is also going to be captured. So friends, lease term is equal to non-cancelable period plus rent-free period plus optional renewal period if lessee is reasonably certain to renew, plus optional termination period if lessee is reasonably certain to not to terminate, right? So now we will discuss this with the help of 2-3 examples. Ambient Small Limited enter into contract with Haldiram Limited to provide a space for outlet on a lease basis for 10 years. They the initial 6 months will be a rent-free period, and further 5.5 year will be a non-cancelable period. And if any party default, they have to bear the rental cost up to this period. They have to bear the rental cost up to this period, right? Which means what is the lease term with respect to Ind AS 116, and there is no indication about optional termination period is given, nothing. So in this case, what is my lease term? My lease term is equal to non-cancelable period plus rent-free period. Non-cancelable period is 5.5 year. Rent-free period is 0.5 year. My total lease term will be 6 years. Next example. Ambient Small Limited entered into a contract with Haldiram Limited to provide a space for outlet on a lease basis for 6 years. The initial 6 months will be a rent-free period, and further 5.5 year will be a non-cancelable period. And if any party defaults, they have to bear the rental cost up to this period. The lessor has also provided a lease renewal option for a period of 2 years and agreed that in this 2 year, the rental cost will be 20% less than the market rentals. Here you can see the total lease period is 6 years. The rent-free period is 6 months. The non-cancelable period is 5.5 year. And the renewal option is given for 2 years. And on the date of initial contract, it was agreed that the rental cost will be 20% lesser than the market rent. So in this case, if you can see, there is an optional renewal period which is given, and the lessee is also reasonably certain. The lessee is also reasonably certain that the lessee is going to renew the contract. Why? Because he'll get the premise at less than 20% market rental, right? So in this case, my lease term is equal to non-cancelable period plus rent-free period plus optional renewal period. Only when the lessee is reasonably certain to exercise the renewal option. In this case, the lease term is total 10 years. So Abrikis, in that case, the question will indicate, like in this case, if you can see, the question has indicated that if the lessee is going to renew, the lessee will get the the premises at 20% cheaper market rental. Correct? At 20% cheaper market rental. So tell me, if market rental is 5 lakh rupees and you are getting at 4 lakh rupees, will you ready to continue into the same premise or not? Because there is a shifting cost also. You have to settle down as well, right? So that is why the word use is reasonably certain. It is not virtually certain. It is reasonably certain. Correct? Third example. Ambient Small Limited has entered into a contract with Haldiram Limited to provide a space for outlet on a lease basis for 10 years. This is for 10 years. The initial 6 months will be a rent-free period, and further 5.5 year will be a non-cancelable period. And if any party defaults, they have to bear the rental cost up to this period. In the last 4 years, the lessee has the option to terminate the lease by giving only 1 month notice. But the lessee has incurred a huge leasehold improvement in this premise. Tell me whether the lessee wants to terminate this contract after 6 years. क्या होगा, लेसी टर्मिनेट करना चाहेगा, 10 साल का कॉन्ट्रैक्ट है, 6 साल तो नॉन कैंसिलेबल प्लस रेंट फ्री पीरियड है. Why? Because the lessee has done a lot of leasehold improvements. So in this case, what is my lease term? Non-cancellable period plus rent-free period. In this question, optional renewal period is not there. So the termination period will be covered only when the lessee is reasonably certain not to exercise the termination option. So the total lease term is 10 years in this case. Correct? Hence, we talked about the lease term as well. Correct? We talked about the lease term. We understood the lease term, right? And we have covered all these aspects of lease term. Now, friend, we will discuss if there is a termination clause which is given in the lease term, that how this termination clause will be interpreted. In many contract, both the parties have a right to terminate. For example, in Haldiram example, we have seen the contract was for 10 years and the non-cancelable period was 6 years, but the last 4 year was a termination period. Now, scenario number one. If both the parties have a right to terminate the lease, both the parties have a right to terminate the lease. Okay. Both the parties. Friends, if both the parties have a right to terminate the lease, in that case, you are not required to consider optional termination period while calculating your lease term. So always remember, if the question talks about a lease contract for 10 years, the non-cancelable period for 6 years, and question says that the lessee and lessor both have a right to terminate in the last 4 years. In that case, you are not required to consider optional termination period while computing the lease term. Okay. So in that case, my lease term will always be 6 years. Doesn't matter I have done a lot of leasehold improvement or not. If only the lessee has the option to terminate, in that case, you have to consider the optional termination period if there is a reasonable certainty that lessee will not terminate, like in our example. But if only the lessor has the termination option, you are computing the lease terms from the lessee perspective. In that case, you are also required to consider the optional termination period from the lessee perspective, right? Because the lessee does not have a right to terminate. लेसी के पास तो राइट ही नहीं है, सिर्फ लेसोर के पास है. तो उस केस में तो आपका पूरा का पूरा लीज टर्म इंक्लूडिंग द टर्मिनेशन पीरियड विल बी देयर फॉर द लेसी. अंडरस्टूड? अगर राइट दोनों के पास है तो ऑप्शनल टर्मिनेशन पीरियड कंसीडर नहीं करेंगे. सिर्फ राइट लेसी के पास है तो रीजनेबल सर्टेनिटी देखेंगे कि टर्मिनेशन नहीं होगा. अगर सिर्फ लेसोर के पास राइट है, देन द इंटायर पीरियड विल बी द लीज टर्म, बिकॉज लेसी डज नॉट हैव अ राइट टू टर्मिनेट इट. Correct? This is what which is given in this example also, and we have covered this in detail in our last class video. Last class means last batch. Okay. Reassessment of lease term. You have to reassess. Why? Why reassessment of lease term is required? Why? Because of two factors. Non-cancelable period is fixed. Rent-free period is fixed. But there are two factors where you are considering on the basis of reasonable assurance: optional renewal period and optional termination period. Right? Correct. So whenever there is a change in the circumstances which is not within the control of the lessee, right? The lessee is required to change the lease term, and the lessee is required to reassess the lease term. For example, I have seen the companies which have entered into long-term leases before COVID, and when the COVID came, and probably those companies have also covered the renewal period, termination period while computing the lease term. But when the COVID came, the companies have early terminated the contract, right? They have vacated the premises. They have given work from home, a long-term work from home to the employees. Friends, this is a change in the circumstances, significant change, which require a reassessment, right? And if there is a significant changes which requires a reassessment of the lease term, the lessee is required to reassess the lease term. And the lessee is required to reassess that whatever optional renewal period the lessee was talking about, that it is reasonably certain. Is it reasonably certain? The optional termination period the lessee was talking about, he is not going to terminate the contract. Is it the same thing? Or vice versa? Earlier, the lessee was not considering the renewal option. Now he wants to consider the renewal option. So this, in that case, the lease term will be revised. Okay. Now, friends, we'll discuss the lease payment. We discussed the identified asset. We discussed the right to control the use of the asset. We have already discussed the uh, lease period. Now we'll discuss the consideration. So it's 8:21 now. Let's have a break for 10 minutes, right? So we'll discuss further after 10 minutes. Let's have a break for 10 minutes. I mean, we will start at 8:32. We are discussing the lease consideration. And what is the lease consideration? It's a lease payment. We are discussing lease payment, correct? So generally what happens is visualize the life cycle of this entire lease payments. Okay. Let's say when you guys become a chartered accountant, few of you will open your own offices, right? You will start your CA practice. When you will start your CA practice, you will sign a lease agreement probably, right? If you are taking a premise on a rental on a rental premises in a big towers. So at that point of time, what landlord will demand from you? The landlord will demand fixed payment. For example, the landlord will say that I'll charge 50,000 rupees lease rental every month. And he'll also say that after every 11 months or after completion of 1 year, I'll escalate the lease rental by 10%. Okay, so there are some escalation also, correct? If you are taking some, items or asset which are on a lease basis, let's say the printer, the, I would say car or office equipment on a lease basis, computer, laptop on a lease basis, the lessor will say that, after the end of the lease term, what exercise price you will pay me? Let's discuss today only. So probably at the end of the lease term, because you have used the asset for the entire lifetime, so you have to pay some exercise price also if the purchase option is there in the lease contract. The lessor will also demand some residual value guarantee from the lessee. You have to guarantee me, correct, that at least I'll get 5% of the cost as a residual value. If you will terminate the contract early, you have to pay the penalty also, correct? So in real life scenario, these things happens in real life scenario. And these are the aspect which is captured into the lease payments in the lease contract. Now from the accounting perspective, from the standard perspective, from the examination perspective, what is considered as a lease payment? Sir, if I have to create a right of use asset, what is the amount, what is the lease payment I should consider for the purpose of discounting, for the purpose of multiplying with the present value factor, right? What is the lease payment that I need to consider? Standard says that the lease payment, which is also known as a future lease payments for the lessee. And right now we are talking about the lessee. Okay. There are 5 lease payments for the lessee. There are 5 kind of payments which are going to be considered for the lessee. 5. Number 1, fixed payments including in substance fixed payment. Fixed payment including in substance fixed payment less any lease incentive which is given by the lessee, given by the lessor. Let's say rent free period. So rent free period is a zero rent period. You're not required to, consider any lease rent for that period. Or the lessee is giving you discount. The lessee is saying that in the initial 2 years, I'll give you 20% discount. The lease rental is although 20,000 or 50,000, let's say 50,000 rupees, but I'll give you 20% of that, 10,000 as a discount. You have to pay me 50,000. I have to refund you 10,000 rupees every month. This is what the lessor is telling to the lessee. So fixed payment, including in substance fixed payment, including in substance fixed. Fixed payments, including in substance fixed payment, less any lease incentive. Sir, what is in substance fixed payment? Let's say Vishwas has entered into a lease contract for a period of 3 years. The lease rent is 10,000 rupees every month. Every month. Or let's say every year. 10,000 rupees every year. What is my fixed payment? 10,000 rupees for a period of 3 years. There is a escalation clause in the lease contract which says that after 1 year, 10% escalation will be there. Sitting today, do I know that in the first year it should be 10,000, in the second year it should be 11,000, in the third year it should be 12,100? So in the second year, I'm paying 1,000 rupees over and above 10,000. In the second year, I'm paying 2,100 over and above 10,000. So don't you think these escalations are also in substance fixed payments? These escalations are also in substance fixed payments? Yes or no? Whether these escalations are in substance fixed payments or not. In substance, these are also fixed payment. I know today that what is going to be my cash flow, what is going to be my outflow. I know today. I know that, right? This is also in substance fixed payment, right? So you have to consider lease payment in substance fixed payment. If there is any lease incentive, you have to reverse that lease incentive. You have to reduce that lease incentive, right? Second, variable lease payment depending on an index rate measured using a prevailing rate at a measurement date. Let's say the lessor says to the lessee, the rent is 10,000. I'll increase the rent to the extent of wholesale price index at the end of every year. So today I'm not aware. So I can expect as per today's wholesale price index. But after 1 year, let's say whatever wholesale price index I have estimated, there is a variation in the estimation versus actual, right? There is a variation in the estimation versus actual. So friends, whether the escalation on the basis of index or a rate will be considered as a lease payment or not. Yes, it will be considered as a lease payment. Standard says that if there is any variable lease payment, which is on the basis of an index or a rate, it will be considered as a variable lease payment to be covered under the lease payments, under Ind AS 116. Sir, which kind of variable lease payment will not be considered? Variable lease payment on the basis of quantity produced. In many lease contracts, generally what happens, and in the case of startup, how these lease contracts are developed or designed, they say that I'll charge 20,000 rupees per month plus 5% of the revenue you are generating. If that startup is generating a revenue of, let's say, 1 lakh rupees, so 5,000 rupees is the variable lease payment. If that startup is generating a revenue of 1 crore rupees, 5 lakh rupees is the variable lease payment. That variable lease payment has to go to the P&L, right, by the lessee. That variable lease payment is not on the basis of an index or a rate, right? So that will not cover under the future lease payment for the lessee. Whenever a variable lease payment, other than those variable lease payment which is on the basis of an index or a rate, right? These lease payment has to go to the P&L. Is that clear? So we discussed variable lease payment also. And friends, again, I am reiterating and repeating. Again, I am repeating. Please refer the detailed video session, the detailed class for the detailed explanation. I have spent a lot of time on this future lease payment in my last time. Third, exercise price of a purchase option. You have to see if the contract permits you the purchase option at the end of the lease term, and the lessee is reasonably certain also that the lessee will continue at the end of the lease term, and there is any exercise price which is given, that exercise price will also become part of your future lease payment. For example, the lease term is 5 years, and exercise price always comes at the end of the lease term. So let's say the exercise price is 50,000 rupees. So that 50,000 rupees cash outflow will come in 5 years. So while computing the present value, you have to take the 5th year discount rate for arriving at a present value of the exercise price. penalties for terminating the lease. If the lessee is reasonably certain that he will terminate, and if there is any termination penalty, in that case, the termination penalty is also required to be taken into consideration. Okay. Residual value guarantee given by the lessee. If the lessee has given any residual value guarantee, that residual value guarantee is also taken into consideration for the computation of the lease payment. Friends, these are the 5 lease payment from the lessee perspective. If the lessor has to do the accounting and the lessor has to compute the lease payments, the lessor has to consider these 5 lease payment plus plus 5 lease payment plus one more, which is residual value guarantee by to the lessor by a third party, which is related or unrelated to the lessee. Friends, from the lessee perspective, we have considered the residual value guarantee only by the lessee. But from the lessor perspective, doesn't matter it is lessee. If a third party has also guaranteed, or any related party, for example, holding company of the lessee, subsidiary company of the lessee, even if those parties have also given the guarantee, so from the lessor perspective, those residual value guarantee is also required to be considered. This is the only difference between the lessor and lessee lease payments. Correct? So let me take you on the Excel file where I've already shown you. So the same file I'm using, which I have shown in the last batch. Lease payment include fixed lease payment from the lessee and lessor perspective. If you are computing from the lessee perspective, this will be covered. From the lessor, this will be covered. In substance, fixed payment, right? Variable lease payment on the basis of index or a rate. Exercise price of a purchase option. Termination penalties. Residual value guarantee. Friends, one thing I'm just making it clear, although I know you guys are CA final student and you understand. Exercise price in case of a purchase option. This is an outflow for the lessee. For the lessor, it is always inflow. Like all these payments are inflow for the lessee, correct? For the lessee, all these are outflow. Termination penalty, residual value guarantee by the lessee, but by any party related, not related to the lessee, it will only covering under lessor accounting. This is the total computation of the lease payments. Okay. Is that clear? Is that clear? Let's discuss one example here. Lease contract is for 5 years. Lease payment is 1 lakh. It is 10,000 rupees every year. Escalation clause 10% every year. Exercise price at the end of the lease term is 15,000. Residual value guarantee at the end of the lease term is 10,000. What is your lease payments? What is your fixed lease payment? Tell me. In this case, what is your fixed lease payment? Viraj, can you tell me what is the fixed lease payment? 10,000 rupees every year. 10,000 rupees every year is my fixed lease payment. This one. The escalation is 10%. What is my in substance? What is my in substance fixed lease payment? My fixed lease payment is 10,000 rupees for a period of 5 years. What is my in substance fixed payment? In the year 2, 10% of 10,000. Right? So 10% of 10,000. In the year 3, how much? This plus this and 10%. Right? Is that clear? Plus this also. Correct. In the year 4, what is the increase in the year 4? What is the increase? 10,000 plus 2,100 multiply by 10%, 110 plus what? Plus this, plus this. Correct? Is that clear? So tell me, in the year 1, 10,000 was the lease payment. right? In the year two, my lease payment will become 11,000. In the year three, my lease payment will become 12,100. Okay. Yes, this 1,000 will not be added. You are right, Viraj. In the year three, it will become 10,000 plus 3310. In the year four, Viraj, is that clear now? Is that clear now? Plus 3310. In the year five, it will become 4641. What is the total payment, Viraj? What is the total payment after escalation? In the year one, it will be 10,000 only. Viraj, what is the annual payment in the year one? 10,000. In the year two, 11,000. In the year three, 12,100. In the year four, 13,300. Is that clear? Not clear. In the year five, 14,641. Viraj, why third year amount is not correct? You can see every amount is 110% of the other, right? Every amount is 110% of the other of the last year, 110%. Correct? Whether fixed lease payment or in substance fixed lease payment is clear. Whether fixed lease payment and in substance fixed payment is clear. Is it clear? Viraj, is that clear now? I am waiting for the answer. Okay. Simply you can see last year it was 10,000. In year two, 10% increase on 10,000. It will become 11,000. In year three, 10% increase on 11,000. It will become 12,100. In year four, 10% increase on 12,100. It will become 13,310. In year five, 10% increase on 13,310. And I've just compared with 10,000. These are the in substance fixed lease payment. Is there any variable lease payment on the basis of index or rate? Nothing is given. Exercise price in case of a purchase option is also given 15,000. Residual value guarantee is also given, which is 10,000. This is your total lease payment year by year. Year one, two, three, four, five. Okay. Assuming present value factor is 10%. What is my present value factor in year one, two, three, four, five? This is my present value factor. And this is my present value of lease payment. When I'll multiply this, multiply by this, correct? This will give me the present value factor. And what is my total? What is my present value of total lease payment? 3,978. What is my accounting entry? Right of use asset account debit to lease liability. Right of use asset account debit to lease liability. Correct? Any question, any doubt so far? Any question? Any question, friend? I hope this aspect is also clear. Lease payments, lease payment, how to prepare amortization table. Okay. So let me prepare an amortization table for Viraj here. Amortization table for right of use asset, Viraj, lease liability both. Correct? Okay. Amortization of right of use asset. Year 1, 2, 3, 4, 5, depreciation. What is my right of use asset? 60,978. This divided by, what is my lease term? What is my lease term? My lease term is 5 years. Divide by 5. This will be my depreciation every year. And by this, the right of use asset will become zero by the end of the 5-year period. Now, I'll prepare the lease payment, the lease liability schedule. So I'm just copying from the last table, lease liability. Lease liability, right? And let me take here. This is my lease liability schedule. My rate is 10%. Discount rate is 10%. Okay. Year 1, 2, 3, 4, 5. What is my opening liability? Viraj, what is my opening liability? My opening liability is to lease liability 6978. Correct. What is my interest cost? Assuming all these payments will happen at the end of the year. What is my interest cost? This multiply by 10%. Correct. What is my lease payment in the year one, Viraj? What is my lease payment? I'll take the lease payment from here. My lease payment in the first year is 10,000. Correct. The closing is this plus this plus this. In the second year, this will become opening. I'll compute interest on this. What is my lease payment in the second year? Viraj, what is my lease payment in the second year? 11,000 is the lease payment in the second year. This is my closing. This will become the opening of the third year. Then there is the interest cost will be there. What is my third year? Viraj, what is my third year payment? 12,100. Correct. Then this will become the opening of the fourth year. There is an interest cost which will be there. Right. What is my fourth year payment? My fourth year payment is 13,310. Then my fifth year opening liability is 36,000. I'll charge interest 10%. What is my total lease payment, Viraj, at the end of the fifth year? What is my total lease payment? 39,3641, right? Viraj, I hope you are okay with the right of use asset amortization schedule and lease liability schedule. My total interest cost is 25.23 and my total depreciation cost is 6978. The total amount which will go to the P&L is 86,051, 86051. And what is my total payment? My total payment is also 86,051, 86051, 86051. Right? This will be debited in P&L by this way. 60,978 in the depreciation, 25,073 in the interest cost. Any challenge? We have discussed this lease payment, that how this lease payment is impacting my right to use asset and lease liability, and how I am depreciating and how I am charging interest cost and then paying my lease liability. Correct? These questions I have already discussed. Interest rate, Generally, it is given in the question. It is a discount rate. Interest rate is a discount rate. Initial direct cost. Initial direct cost are those costs which is directly relating to the lease contract. Which is directly relating to the lease contract. Okay. If the lessee would not have entered into a lease contract, this cost would not have been taken into consideration. These costs will not come. So what are these costs? Commission to the broker, legal fee, lease documentation preparation cost, payment to existing tenants to move out, consideration for a guarantee to an unrelated third party, right? These costs are not considered as an initial direct cost. Employee salary, legal fee, negotiating lease term and conditions, advertising, depreciation and amortization. These are not a lease cost. Now, treatment in the books of initial recognition. Now we have come to initial recognition and measurement of right of use asset and lease liability in the books of the lessee. Correct? For Viraj, let me know if you have any questions so far. I would be happy to answer and then I'll move forward on this recognition and measurement. If you have any question, you can just raise your hand. We'll unmute you and you can ask your question. Viraj is saying no question. Abrikes, any question from your side? So one question is there from Munish. Munish is saying, sir, please explain residual value guarantee. Please explain residual value guarantee. Okay. So residual value guarantee is simple. I have given a car to my lessee, right? The contract is 8-year contract. Okay. So what I am getting a lease rent. I am getting a escalation also. And I am not giving the purchase option. And I know that when I get my car back, the car will not be into the usable condition, probably. Okay. So in that case, I have told lessee that my car should fetch at least 50,000 rupees as a residual value. Okay. So the one of the garage or one of the one of the vendor has already guaranteed the lessor that I will, if you will return this car to me or if you will give this car to me, I'll pay you 40,000 rupees. But the lessor wants 50,000 rupees. So lessee has given a guarantee of residual value to the lessor by this 10,000 rupees of shortfall. Okay. So this is known as a residual value guarantee. If no one has given any residual value guarantee to the lessor, then entire 50,000 rupees will be considered as a residual value guarantee which is given by the lessee, right? Probably whatever lessee will receive by selling the asset, right, on behalf of the lessor, probably that will be the inflow to the lessee. But from the perspective of the lease payment, the lessee has to consider this 50,000 rupees as a residual value guarantee. Is that clear, Munish? Munish, I hope this is clear. Yeah, very good. Okay. So now we'll discuss the initial measurement and recognition of right of use asset in lease law. What is my initial measurement right of use asset? First of all, I know that right of use asset will be debited and my lease liability will be credited. Whether it will always be my lease liability. It will always. So we'll discuss. Let's see. Right of use asset will be debited by sum of the following item, by sum total of the below items. Means these items will be credited and in total right of use asset will be debited. Right. So first of all, right of use asset will be debited by present value of the future lease payments. Present value of the future lease payments. Like we have seen, first we have computed lease payment, then the lease term, and then we have discounted. So right of use asset account debit to the lessor or to the lease liability account. To the lease liability. Correct? ROU to lease liability by present value of the future lease payments. Now, before lease payment, before commencement date of the lease, the lessee has given an advance to the lessor. The lessee has given an advance to the lessor before commencement of the lease. What is the accounting of that advance? What is the accounting of that advance? Some sort of security deposit which the lessor has given. What is the lessee has given? What is the accounting entry for that advance? Lease lessor account debit to bank account. Okay. At the commencement date, what will be the accounting entry at the commencement date? What is the accounting entry? Lessor account debit to bank account. Now, right of use asset account debit to lessor account. Right? Right of use asset account debit to lessor account. Okay. Whereas it is not bank account debit. You are not received the money back. The first entry is lessor account debit to bank account. The second entry is, what is the second entry? Advance rent to lessor, you can say. So lessor to bank, advance rent to lessor. Now ROU to advance rent. Or alternatively, first entry lessor to bank, you have just created a recoverable from lessor. At the commencement date, when you are creating right of use asset, you are crediting lessor, you are debiting right of use asset. Correct? Instead of asset which was lessor earlier, now it become right of use asset. Is that clear or not clear? Simple accounting entry. Any lease payment paid before commencement date, it has to be debited to the asset and it has to be credited to the lessor account because earlier lessor was debited. Third, any initial direct cost which you have incurred, at the time of commencement of the lease, any expense you have incurred, right of use asset account debit to bank or to expense payable. Now, one of the important aspects, provision for dismantling, asset retirement obligation, which we have also read in PPE standard. For example, the company has taken a premises on a lease basis. Like all these tower infra company, telecom tower companies, they put a tower on the land, on the leasehold land. They put the tower on the leasehold land, right? They put the tower on the leasehold land. Okay. Now what happened? After a certain lease period, let's say 10 years, they have to dismantle this tower and they have to restore this land into the same condition in which the lessor has given it to the lessee. Right? So in that case, whatever asset retirement obligation is there, whatever asset dismantling obligation is there, right? It has to be debited to right of use asset and credited to provision for asset retirement obligation. The same accounting which we have discussed in PPE standard. So friends, the right of use asset will be debited and lease liability will be credited by present value of future lease payment. Right of use asset will be debited and the lessor will be credited by any advance lease rental paid to the lessor before commencement date. Right of use asset will be debited and bank oblique expense payable will be credited by initial direct cost. Right of use asset will be debited and provision for ARO will be credited to the extent of asset retirement and dismantling cost. Correct? Now I'll take you on the Excel file and discuss one example here. A Limited has taken a leasehold office from B Limited on 1st April 2000. Abracase at future value, this right of use asset will be debited and provision for ARO will be credited. Yes. So future value for, so you have to estimate what is my asset retirement obligation. Correct? Let's say after 10 years, it will be coming at 50,000 rupees. So now you have to discount it today, right? You have to compute the present value of the 50,000 payable at the end of 10 years. So let's say the present value comes out at 11,000 rupees. So 11,000 will be debited to ROU and 11,000 will be credited to provision for ARO. Okay. And this ROU will be depreciated over a period of 10 years. And this provision for ARO will be compounded by the rate by which it was discounted. It will become 50,000 by the end of 10 years. I have given all the flavor in this example of right of use asset. A Limited has taken a leasehold office from B Limited on 1st April 2023 for a period of 5 years. Period is 5 years and starting date is 1st April. A Limited has paid an advance rent of 10,000 before 1st April 2023. So before commencement date, it has paid 10,000 rupees. B Limited has given a lease incentive of rupees 20,000 at the time of entry of A Limited in the office space. B Limited has also given some discount, some incentive. The remaining rent A Limited will pay as follows after 1st April 2023. 90,000, 1 lakh, 1 lakh, 1 lakh, 1 lakh. A Limited has also paid rupees 20,000 for lease registration in the court of law. It means initial direct cost. The company has done some leasehold improvement in the lease premises, which lessor has told to the lessee that at the end of the lease term, he will be requiring the office in the same condition in which it was given to the lessee. The lessee is expecting the restoration and dismantling cost of 50,000 at the end of the lease term. The incremental borrowing rate of A Limited is 10%. You are requested to provide the accounting entries in the books of the lessee as on 1st April 2023. So in this question, all the elements are there for right of use asset calculation. And it is also talking about the accounting entry, right? So let's solve this problem. What are the elements of right of use asset? Present value of future lease payment. What are the future lease payments? These are the future lease payment. Discount rate is 10%. Okay. Let's compute present value of future lease payment. These are the payment. This is the discount rate. This is the present value. So present value of future lease payment comes out at 369,988. On the commencement date, right of use asset needs to be recognized. Right of use asset includes the following. Present value of future lease payment 369,988. Have we paid any lease payment before commencement date? 10,000. Any lease payment made on or before commencement date? 10,000. Have we received any incentive? 25,000. It has to be reduced. Any initial direct cost? 20,000. Provision for asset retirement obligation. Now, discount rate is 10%. What is the asset retirement obligation provision? The estimated outflow is 50,000. What is the present value of this estimated outflow? At the end of 50th year, the company has to pay 50,000. The present value factor is 0.621. The present value is 31046. 31046 is comes out as a provision for ARO. And what is your right of use asset? It is sum total of all the following. 406034. What is the accounting entry for advance rent paid before commencement date? Lessor account debit to bank account. What is the accounting entry now on the commencement date? Right of use asset account debit to lease liability, to lessor account, to bank account, to provision for ARO. Correct? And the accounting entry for receiving lease incentive bank account debit to ROU. What is my net right of use asset? 431034 minus 25,000. Viraj, Abrikis, Munish, any problem in this question? Rahul, have you understood this question very well? Have you understood this question very well? Yes or no? Yes. Okay. So now let me take you on this PPT. So friends, we understood. Abrikis, let me unmute you. Yes.
Sir,
Over to
in case of 25,000 incentive, is it necessary to pass a different separate entry, I mean bank account to incentive account, or we can just directly calculate the ROU value directly without that entry? Because here a bank account debit to ROU account credit has been done by 25,000 rupees.
So, see, you can also pass net entry, right? For example, whenever you are getting this incentive, you can net it off from your ROU payment as well. You can do that.
Yes, that's what I want. Yeah, okay. Thank you, sir.
Any other question, Viraj or Abrikesh?
No, sir.
Okay, thank you. So far, we have understood under Ind AS 116, we have to be enter into a lot of calculations, right? We have to compute present value of the lease. We have to compute present value of the lease payments, right? Then we have to depreciate these lease payments subsequently. Depreciate these lease payment, I mean to say, our right of use asset. Then we have to compute interest cost on lease liability, right? And then we have to reduce the lease rental from the lease liability. So we have to do a lot of calculation. Before Ind AS 116, at least for operating leases, these kind of calculation were not there. These kind of calculation were there only for the finance leases. Now the question is, sir, even if the company has taken the short-term leases, the company has entered into a contract for a lease period of, let's say, 11 months or 10 months. In that case, do we need to do this present value accounting? Do we need to create right of use asset? Standard says that, my dear friends, standard says that if there is a short term lease means a lease for a period of 12 months or less, means even if the lease period is for 12 months, you can take an exemption. You can take an exemption, right? If you want to create right of use asset, you can do. But for a lease which is up to the period of 12 months or less, means 12 months is inclusive. To the extent of 12 months, you can consider this lease as a short-term lease, right? And you can avail the short-term exemption. Sir, what is this short-term exemption? Short-term exemption means, let's say A Limited has entered into a lease agreement of a car with B Limited, correct? Every month, A Limited is paying a rental of rupees 25,000. And this contract is for 12 months. So this is a short-term lease and A Limited is not required to compute present value. If A Limited has opted for this short-term lease exemption, A Limited can simple every month pass an accounting entry lease rent account debit to bank account. Lease rent account debit to lessor account, lessor to bank account. Every month, the lessee can pass this rent P&L entry. The lessee is not required to do all these juggleries of right of use asset or lease liability accounting. But one condition which is there, if any lease which contains a purchase option is not a short-term lease. For example, the lease period is for 10 months only, but at the 10 months, at the end of the 10 months, there is a purchase option which is available. In this case, the short-term lease exemption will not be available. So you have to be very meaningful and mindful. When you read the question would be a lengthy question. And the question has given you the lease term of 10 months or 11 months. Prima facie, you will think that, oh, this is a case of short-term lease. But one line, which is between the paragraph, one line must be given, may be given, which talks about that the lessee has a purchase option in this particular lease after the end of the lease term. In that case, my dear friends, it will not be considered as a short-term lease, and you have to do this right of use asset and lease liability accounting of Ind AS 116, right? So you have to be aware about this fact, correct? So if you are opting for a short-term lease, you have to choose this election. You have to choose this by way of class of underlying asset the to which the right of use of the asset relates, right? To which the right of use relates. For example, there are four premises: one, two, three, four. For premise number one, the lease contract is for 2 years. For premise number two, the lease contract is for 11 months. For premise number three, it is 11 month. It is 10 month. It is 12 month. This is how this is given. So in these three cases, of course, the option number one, I mean to say the property number one, it is not a short-term lease, it is a long-term lease. For this, the company has to do the mandatory Ind AS 116 accounting. But for property number 234, lease agreement number 234, the company, if wants to avail the short-term lease exemption, the company has to avail, the company has to apply this short-term lease exemption to all these three assets. The company cannot do the cherry picking choice, right? If the company has to apply this short-term lease exemption, the company has to apply 2, 3, 4 on all these three properties. The company has to apply the short-term lease exemption, correct? Yes, Abhikesh, you have a question now. You can ask.
Uh, yeah, sir. Sir, in case of purchase option exclusion, now that I mean, if it is for 10 months, then how the future value can be calculated for ROU?
So future value is if you are paying a lease rental every month, right? In that case, you have to
Yes.
compute the present value of the future lease payments, right? Let's say the standard has given you the discount rate of 10% per annum. Okay. So for the first month, it is 10% divided by 12. Okay. So that will be for the first month, assuming you are paying at the end of every month, correct?
Okay.
Then the second month, third month, fourth month, fifth month, and sixth month, correct?
Okay. Okay. Got it, sir. Thank you.
So even present value will always be there, right? So even if you deposit 10,000 rupees in your bank account as a fixed deposit, even for a period of 3 months, whether it will fetch any interest or not.
Yes,
Yes. So
it will.
let's say after end of 3 months, the fixed deposit value will become 10,300 rupees, right? So it means after 3 months, the 10,300 rupees present value is 10,000 rupees. Correct?
Yes.
Yeah. So this is how you will do the accounting.
Okay. Thank you.
Yes. So this was the short lease exemption. And friends, while computing the lease term, you have to see whether it is a short-term lease or long-term lease. Means you remember the lease period definition I have told you, non-cancelable period. You remember that NCP plus rent-free period plus ORP, optional renewal period, plus optional termination period. You remember those all aspects? ORP, OTP plus OTP, optional termination period. Now the question is, sir, the company has a lease contract of 10 months, right? And the optional renewal period of 6 months. And the company is reasonably certain that the company will avail the renewal option. The company will avail the renewal option. In this case, what is the lease period? What is the lease term? 10 months is the initial lease period. 6 months is the optional renewal period. And the company is reasonably certain that yes, the company will avail that. What is the total lease term in this case? Friend, what is the total lease term in this case? You're right, Rahul, 16 months. 16 month. 16 month is the total lease period. 16 months. So tell me, in this case, whether it will be a short-term lease or it will be a long-term lease. Whether it will be a short-term lease or it will be a long-term lease. Tell me.
Initially, it is a short term. Thereafter, it will become non-short term or long term.
Yes, it will be a long-term lease. It will be a long-term lease means you have to do the Ind AS 116 accounting, which is right of use asset and lease liability. You have to do the discounting, right? So, friends, apparently, if the lease which is given in the question, apparently, don't go by the initial lease period. First of all, compute the total lease period. Then you need to identify it is a short-term lease or it is a long-term lease. Correct? Then you need to identify. Now the low value leases exemption. What is my low value lease? So in your articleship period, you guys must have seen there are a lot of leases which are there, and these leases are sometimes for small items as well. For example, tea or coffee vending machine, table, chairs, which is taken on a lease basis, furniture and fixture, office equipment like fridge, right? Like water purifier, right? Printer, computer, laptop, mobile, these are taken on a lease basis many times. So these leases are considered as a low value leases. And standard says that if a company has taken a low value items on a lease basis, and sir, what is the value of a low value lease? It is not given in the question. It is depending on the accounting policy of the company. The company can decide an accounting policy that any item whose value, and value is not lease rental, any item, for example, you have taken a printer on a lease basis and the value of the new printer is, let's say, 2 lakh rupees. Correct? So you have to see the value of the underlying asset, the value of the new underlying asset, right? So the company has taken an accounting policy that any item which the company has taken on a lease basis, if the value of that underlying asset, if the value of the new underlying asset is up to 5 lakh rupees, it will be considered as a low value leases, right? And if a lease is a low value lease, the company is not required to do Ind AS 116 accounting. The company can simply every month accrue the lease rent account debit to bank. Correct? But if the company has taken this low value asset on a lease basis, but the company is subleasing these assets. So if the company is subleasing these assets, in that case, the company cannot do this. The company cannot avail this exemption. So friends, like we have read, the company can avail the short-term lease exemption except, and what is that exception? Except if the company has a purchase option, in that case, the company cannot avail short-term lease exemption. Likewise, the company can avail the low value lease exemption except if there is a sublease concept is there. If there is a sublease concept is there, in that case, the company cannot avail the short-term lease exemption, low value lease exemption, right? So this is what which is given in the exemption part. Friends, I have already discussed how to compute right of use asset, how to compute uh, lease liability, and what is the accounting entry, how to depreciate right of use asset, how to amortize a lease liability, okay, how to put the interest cost on that. So we have already discussed that in the subsequent measurement. Standard says that you have to see whether you are applying cost model or you are applying revaluation model, right? If you are applying a cost model, right, in that case, you have to depreciate over the useful life of the asset if the lessee intends to purchase it. Means if the purchase option is there, then you have to depreciate the right of use asset over the useful life, or over the useful life, or the earlier of useful life or the period of use, right? So friends, for example, you have taken a machinery on a lease basis, correct? The lease period is 10 years, okay? And at the end of the period, the company has a purchase option and the company is reasonably certain that it will purchase. But the life of this machinery is 15 years. So now you are recognizing right of use asset. You are recognizing right of use asset. So this right of use asset is going to be amortized over a period of 15 years. Correct. But the purchase option is not there. In that case, this right of use asset will be amortized over a period of 10 years or over a period of use, whichever is earlier. For example, the right of use asset is 10 years, but the economic life or useful life is only 8 years. In that case, it will be 8 years, otherwise it will be 10 years. Correct? Revaluation model. Now the company has a machinery which has taken on a lease basis, and company has 5 other machinery which are owned, and the company is opting a revaluation model for these machineries. In this case, if the right of use asset belongs to the class of PPE to which lessee chooses to apply revaluation model under Ind AS 116. So if the lessee is applying revaluation model on these machinery, the lessee will also apply the revaluation model on this right of use asset as well, right? So lease liability. So with depreciation, we have understood it is a kind of a straight line method, and lease liability we have understood it is increased by interest cost and it is decreased by the actual lease payments. Variable lease payment, if any, what you will debit in your P&L? Depreciation on the ROU asset, interest expense on the lease liability, variable lease payment, which one? Not depending on index or rate. For example, 5% of the sales you have to pay as a rental. Impairment of the ROU asset. So these will be debited in the P&L. Just has some question. Yes, Abrikes, you can ask your question.
Sir, in case of variable lease payment, I mean not based on the based on the index, it's only increases to be considered, or because many a times wholesale index also go down also, sir. So only increases to be
Increase or decrease, both. Both.
both. Okay.
Yes, both. Right. Let's discuss this case study, illustration number 30. 30 or so. Just a minute. Illustration number 31. Company EFG enters into a lease. Just a minute. Company EFG enters into a property lease with entity H. The initial term of the lease is 10 years with a 5-year renewal option. The economic life of the property is 40 years and the fair value of the leased property is rupees 50 lakhs. Company EFG has an option to purchase the property at the end of the lease term for 30 lakhs rupees. The first annual payment is rupees 5 lakh with an increase of 3% year thereafter. The implicit rate of interest is 9.04%. Entity H gives company EFG an incentive of rupees 2 lakh payable at the beginning of year 2, which is to be used for normal tenant improvement, right? Company EFG is reasonably certain to exercise that purchase option. How would EFG measure the right of use asset and the lease liability over the lease term? Very important question. I don't know whether you guys have understood or you guys have not understood this question. I don't know, but let me explain this question again. Just give me a minute. In this question, what all has been given in this question? There is a property lease, right? So there is a lease contract. The initial term of the lease is 10 years with a 5-year renewal option. Initial period is 10 years. Renewal option is 5 years after 10 years. And the economic life of the property is 40 years. And fair value of the leased property is 50 lakh, right? Fair value of the leased property is 50 lakh. There is an option to purchase the property at the end of the lease term for rupees 30 lakhs, right? And the first annual payment is 5 lakh, first annual payment, with an increase of 3% every year thereafter. So this company has to pay 5 lakh rupees every year with an escalation clause of 3% for a lease period of 10 years. Implicit rate of interest is given, which is 9.04%. And entity H gives company EFG an incentive of rupees 2 lakh just as a sake of lease incentive at the beginning of year 2. Company EFG is reasonably certain to exercise that purchase option. How would EFG measure right of use asset and lease liability over the lease term? Correct. Let me take you on the Excel file. Please confirm if my Excel file is visible. Please confirm if my Excel file is visible. Okay. Lease term 10 years. Purchase option, yes. Lessee is reasonably certain to avail the purchase option. Exercise price is 30 lakh. Lease payment is 5 lakh. Lease incentive 2 lakh. At the beginning of year 2, discount rate is 9.04%. First year, what is the payment which I have to make? In the first year, 5 lakh rupees. In the second year, 103% of 5 lakh rupees. In the third year, so let me, yes, the present value factor is 1. Why? Because the lease incentive is given at the beginning of year 2, so we assume that all the payments are in the beginning, right? This is at the beginning of year 2, 15,000. Next year, 103% increase, and so forth. This will be the lease payment. But there is a lease incentive also. Abhiraj, you have asked, sir, can we net it off also? Yes, you can net it off. So let me net it off 2 lakh rupees here. Okay. But before that, I'll make it value based because otherwise, when I'll do this minus 2 lakh rupees, the remaining calculation will also change, right? Then I'll calculate the discount rate. 1 divided by 1.0904, right? And this is the present value of the lease payment is 37,37,636 at the end of the 10th year. And this is at the end of the 10th year. And this is the beginning, right? So again, I need to compute this divided by 1.0904. This is 1262. The present value of the total lease payment comes out at 50 lakh rupees. Now, what is my accounting entry? Right of use asset account debit to lease liability. Since the purchase option is there, the right of use asset has to be depreciated over the useful life of the asset. Depreciation amount every year is how much? How much? Simple, this divide by
40.
135,006 rupees. Right? Then what is your lease liability schedule? You have to pay the lease payment only for 10 years. Your lease liability schedule will come like this. And let me show you the fresh lease liability schedule. Correct? This is the opening balance. Then your lease since it is the beginning. So I have first net it off my opening balance, then I'll compute the interest cost. So what is my first lease payment? My first lease payment will be 5 lakh. Sorry. What is my interest cost? At the rate of 9.04%. After netting off this plus this, my interest cost will be multiplied by 9.04%. Right? Correct? Next year, this will become opening balance. And again, this will be my like 15,000 net of incentive. Right? This will be my interest cost. This will be my liability. So this is how this entire calculation will happen. Correct? And at the end of the 10th year, there is a lease payment of 30 lakh as well. And this is how this entire lease liability will be amortized. This is the amortization table or schedule of lease liability as well. Yes. So we have discussed this question as well, where the depreciation is for the full life, but the lease liability is for the year. Correct? We have discussed this question. Any question, friends? It's 9:45 now. So whatever we have discussed so far, any question on that? Let me look at the query
No,
box.
sir.
Any question, Abrikesh, Viraj?
No, sir.
Okay. Any question, Munish? Yes. So Rajiv is asking, sir, can you please summarize whatever you have taught so far? Can you please summarize in a particular steps? Yes, I can do that. So friends, first of all, while looking at a lease contract in your practical life and in your examination question paper as well, first of all, you have to check, is it an identified asset? Correct? And when an asset will be considered as an identified asset? An asset will be considered as an identified when it is implicitly or explicitly given in the contract and lessor does not have a right to replace the asset, which gives the benefit to the lessor. Right? So you have to be, while reading the long or lengthy question paper, you have to get the information that the lessor will be able to replace for his own benefit, right? In that case, you have to just underline that line so that you will be able to decide that whether it is identified asset or it is not an identified asset. right? First of all, you have to identify, is it an identified asset? Answer is yes. Number two, you have to see whether the right to control the use of the asset is lying with the lessee. Again, you have to see that lengthy question, that who is getting the benefit from the use of the asset. For making you guys confused, the question will say that whatever profit by selling that property or by selling that underlying asset, that profit will belong to the lessor. Yes, it will always belong to the lessor. If I'm living in a rental accommodation, I cannot sell that house. It belongs to the lessor. But I can enjoy all the fruits of using this house, the benefit of using this house. Correct? So, for establishing whether the right to control the use of the asset is there, you have to see whether all the benefits relating to the use of the asset should be transferred to the lessee. And it is the lessee who direct the control of the use of the asset, right? So these two aspects are there. If these two aspects are okay, then you have to identify the lease period. What is my lease period? And lease period is equal to non-cancelable period plus rent-free period plus optional renewal period if lessee is reasonably certain to renew plus optional termination period if lessee is reasonably certain not to terminate, right? Friends, this is the important aspect where you will discount your lease payment over the lease period. Number four, you have to check the lease consideration. And we have discussed my lease payment for the purpose of discounting or computing right of use asset. My lease payment from the lessee perspective would be fixed payment plus in substance fixed payment minus lease incentive plus variable lease payment only depending on the index or rate plus exercise price in case purchase option is there and it is reasonably certain that purchase option will be availed plus penalty for terminating plus residual value guarantee given by the lessee. From the perspective of the lessor, whatever lease payment I have told you from the lessee perspective plus the residual value guarantee given by anyone in the world who belongs to the lessee or does not belongs to the lessee, that will also get added, right? Once you have identified what is your lease payment, you have to discount it to arrive at right of use asset calculation to lease liability calculation, right? On the commencement date, you have to debit your right of use asset and you have to credit lease liability by present value of future lease payments. Plus, if there is any payment which has been made before commencement date, you have to credit your lessor account. Plus, if you have incurred any expenses, which is initial direct cost to bank or to expense payable, or if you are required to consider any provision for asset retirement obligation, you have to arrive at a present value. You have to debit to ROU as right of use asset and credit your provision for asset retirement obligation. Subsequently, you have to depreciate your right of use asset. If purchase option is there, then it is over the useful life. If purchase option is not there, then over the period of use or lease period, whichever is low, right? Lease liability, you have to accrete interest, you have to reduce the rental payments. In your P&L, depreciation will come, interest cost will come, variable lease rental will come. Which variable lease rental? Which is not depending on the index of it. And impairment loss, if any, that will also come. Correct? These are the aspects which we have discussed in today's session, in today's class. And friends, in the tomorrow class, we will discuss lessor accounting, lease modification, sublease, and sale and lease back, right? These four aspects we will be discussing in the tomorrow class. Into 10 at the same time, and we will continue with the concept and we will complete the Index 116, right? Tomorrow. If you have any question, I would be happy to answer. Any question?
No, sir.
No, any question? Okay.
Sir, tomorrow same time, no? 7 to 10.
7 to 10. Let's discuss a separating component of a contract, right? Is it a lease contract or is it a non-lease? Is it a lease component or is it a non-lease component? So an entity shall account for each lease component of a contract as a lease separately from non-lease component of the contract, unless the lessee may elect not to separate them and account for each component as a single component. What is that? Friends, for example, if you are living in a society, you are paying a lease rent and you are also paying a maintenance charges. You are paying maintenance charges to the society residential welfare association, and you are paying a lease rent to the lessor. So for the purpose of the use of the asset, you are paying a lease rental. But for the purpose of maintenance, because you are getting a security, your kids are getting, garden to play, you have a parking space, for all those aspects, you are paying a maintenance. So that maintenance is a non-lease component. It is not a lease component. It is a non-lease component. Okay. It is a non-lease component because you are getting a separate benefit from this maintenance. You are not getting the same benefit of using that house. You are getting a separate benefit for the maintenance. And probably if you are living in a builder floor, you are not obligated to pay such a maintenance charges, right? So in that case, friends, this lease rent and maintenance has to be applied as a separate accounting. Correct? Has to be applied as a separate accounting. This is the example which we have covered in the last class. So this was all about the leases which I have covered. Shilpa ji, do you have anything to discuss or anything to announce?
Sir, I feel for tomorrow's class we should aware students because this has been scheduled on short notice. That students tomorrow also will be having this FR session in continuation to the continued today's standard. Tomorrow also, sir will be discussing on India's 116 leases. So, same time on tomorrow. Okay.
And this is for your benefits only, students. And we have decided to cover this big standard in two. Although the instruction was given that everyone has to, listen, watch, and everyone has to, go through with the 5 classes of the last batch. But still, we have decided to take 2 classes on this big standard so that we will cover the practical aspect as well, right? And we'll cover this standard in detail while covering the standard from the query and revision perspective as well. Yeah. So thank you so much. If you do not have any question, I would be happy to conclude the session.
Thank you, sir. Thank you, Ashok ji. Thank you, Shilpa ma'am.
Yeah, session. Thank you so much.